Welcome to the OCBC Financial Masterclass. I'm Wayne Chua, Head of Bancassurance at OCBC Wealth Management. My team and I are in charge of managing the insurance business at OCBC Bank, working very closely with Great Eastern to ensure that only the best-in-class products are designed to suit our customers. We specially curate products that help our customers to achieve their financial objectives and protection in life. Today, I'm going to talk about safeguarding your wealth and how we can do it with insurance. Let's start with a hypothetical scenario. Suppose something unfortunate and unexpected happens to the sole income provider of your family. Do you have enough to withstand the unforeseen income shock? Sure, we may have emergency cash saved as what we are told to prepare, but this can only go so far. There might be other substantial long-term liabilities that will drain the well dry in your family if there are insufficient safeguards planned in place. The inconvenient truth is, savings alone might not be enough to pull us through unpredictable obstacles. Some examples of typical crises which could result in the need for protection includes hospitalization, critical illness, disability, and premature death. Take hospitalization as an example. When one is hospitalized, the high cost of hospital bills and potential loss of income can potentially derail our finances. Likewise, critical illness or disability can also adversely impact our ability to earn an income. Coupled with the high cost of medical treatments, you will surely find yourself in a financial bind. Stability could be shaken like a massive earthquake. Think about this. If you are seriously ill one day, would you still want to be burdened by mountains of financial worries instead of focusing on your health and on recovering? In other cases, an unexpected death can gravely impact and become highly disruptive to the life of financial dependents. We are hit with the question, who will take care of the family financially? The next of kin would most likely have to take on these responsibilities, whether they are prepared for it or not. The good news is, there is a solution to deal with such unexpected costs. Insurance is an effective and essential financial tool to protect your family members. There are various insurance plans to cover such unexpected events. Depending on the policy, the beneficiaries will receive a certain amount of payouts. These payouts can be substantial and help financially tide you over this period of time. For peace of mind, you should plan to set aside a comfortable portion of your income to purchase an insurance plan to ensure that you and your family are protected. It is priceless when it comes to ensuring there is a safety net for your loved ones. Ideally, we should safeguard ourselves against the unforeseen in key stages of our lives to ensure that our life plans are not derailed by financial shocks. It should start as early as your first job, to purchasing your first home, to getting married and having children, and even when you retire. There are many types of insurance products available in the market. Know their purpose before you purchase them. Take mortgage insurance as an example. You will need it the moment you sign on the letter of offer to take on a housing loan, so that in the event of premature death, critical illness, or disability, a lump sum will be paid out to cover off the debt. General insurance, on the other hand, helps to protect you and your assets from damages and losses. Some common examples are car insurance, home content insurance, personal accident plans, and travel insurance. I couldn't emphasize more. The most basic form of insurance that you need to have is health insurance. With the rising cost of medical treatment, cash savings are rarely enough to cover hospitalization, surgery, or other major medical bills. Out-of-pocket spending for unexpected medical expenses can cause substantial financial hardships for individuals who are not prepared to handle such heavy expenses. As such, health insurance is essential to protect against financial burden of large unexpected medical expenses. Health insurance is a basic necessity and should be the first insurance you buy as early as possible. Singaporeans and permanent residents have access to basic health insurance in the form of MediShield Life. The coverage is sized for treatment in public hospitals and payouts are packed at B2 and C-type wards. The plan covers you for life, including your pre-existing conditions, and its premium can be fully paid from your MediSave account. Given that this is a basic plan, payouts may only cover a portion of your hospital bills. You may have to top up the difference using MediSave or cash. With MediShield as a foundation, you can build on it with an integrated shield plan that can provide additional benefits and coverage through a private insurer. Depending on the plan, some can cover you for a higher type ward, A or B1 class, in a public hospital, or even admission into a private hospital. These plans are administered by private insurers, and you will need to top up using cash or MediSave to pay for the additional premiums for higher private insurance coverage. In essence, Singaporeans and PRs are mostly assured basic medical coverage, and a large proportion of Singaporeans have supplemented this basic coverage with an integrated shield plan. A comprehensive integrated shield plan can help defray a large part of the major medical expenses. And on top of covering these hospital bills, there are also increasing focus on taking up critical illness coverage from critical illness plans that will help cover the living expenses while you focus on recovering. So, check your healthcare coverage today. Make sure you are comfortable with the coverage you are getting and are able to afford the premiums for the long term. In addition to sufficient health insurance coverage, it is important to also look at life insurance. The purpose of life insurance is to provide financial support for your dependents if or when you are diagnosed with terminal illness or die prematurely. You should ensure you have enough coverage to provide for them until they are financially independent. You might ask, how much life coverage is enough? A general rule of thumb would be to obtain coverage for 10 times of your annual income. In this case, your financial dependents should have enough money to tie them over for at least the next 10 years. There are no fixed rules, of course. The circumstances are very different for each individual, according to how much your dependents would need when you are no longer around. The amount of life coverage typically depends on the number of dependents you have and the time horizon you would like to cover them for, the level of financial provisions you want for your family when you are no longer around or are able to provide, how much you need for your children's education, existing debts or mortgages. Next, let me share with you the things to consider when buying an insurance. Cheaper is not always best when it comes to insurance. So, please shop around and compare. The comprehensiveness and amount of protection coverage are important features to look out for. Take advantage of comparison portals to truly check out differences in features, coverage, and premiums. It is also important to find out if a plan is bundled with an investment or not. Such bundled products may result in additional layers of cost. For some, this might be appropriate for their needs. For others, they may prefer to split insurance from investments. There is no right or wrong. It is purely up to preferences and needs. The bottom line is only to make a decision with full knowledge of the product. Read through and understand the insurance product to ensure that hidden features or exclusions do not come as a surprise to you later. Buying life insurance is a long-term commitment. You may not recover the total premiums you have paid if you terminate your plans prematurely. So, you should start early and ensure that you can sustain the premium payments way into the future. Work with a financial advisor for your protection needs. Insurance is not as complicated as you imagine. You just have to understand your needs and know what product will serve that need. If you are unsure, you should speak to a financial advisor who knows the subject well. General insurance is typically straightforward, and you probably could do your own research. However, major insurance coverage like life and health requires deeper thought and consideration. Circumstances change with time, and with it, the goalposts. Your insurance coverage should be re-evaluated as these targets move. You will have different protection needs at different stages of your life. Revisiting and reviewing your insurance plans during key stages of your life is important to make sure your coverage is sufficient. I hope what I have shared with you today is useful. Don't let a personal crisis become a financial crisis. Ensure that you and your loved ones are financially protected.